Whenever you have a formation, let's say it is a buy formation, that formation should be representing big banks formation, big banks rally or drop in price. Now, let's say, for example, you have something like this. There's something we call fair value also. There's something we call fair value. Now, this fair value is like a magnet for price. Fair value is magnet for price. So what is fair value? Let's say this is a buy formation. We all know this is a buy formation. Now, on this buy formation, let's say the zone is here, proximal line, distal line. Remember, there's usually consolidation in the area. You might see consolidation on your zone, and price is coming back to the zone. Now, what you are seeing here is what we call the fair value. Now, this fair value is what is going to attract market price to come back into the area. Fair value is what usually attracts price to come back into an area. So, but if you have a formation like this, Abdulaziz, your correction was that on this XAUAUD, your zone, your buy zone was something like this. And the fair value is something like this. You can see that the fair value is too close to your zone. This is too close to the demand zone. It is too close. This is not good. This is not what we want to see, okay? And this is what I'm talking about. All right, look at what I'm talking about here. You can see here, this is the formation, draw-based rally, a very good formation. However, you can see where the fair value is. The fair value is too close to the zone. It is too close to the zone, which I don't like. I don't like to see fair value getting close to my zone, okay? Also, whenever you see price getting closer to your zone like this and rallying up massively like this, you don't have to take that zone again when price come back to the zone. It is wrong for you to take entry on the zone again whenever price come back to the zone again. It is very wrong, okay? So what is opposing zone? What is opposing zone? Opposing zone. What's opposing zone? Now, this is what opposing zone is all about. For example, let's say you see this is a higher time frame, right? D1 is also a higher time frame. So on this D1 time frame now, you see this area is a supply area on the D1. This area is a supply area on the D1. Let's say market price came back to that area. What do you think market is going to do when price came back to this zone here, to this psychological supply level of on the higher time frame? Do you think if you have, let's say for example, you have a buy formation around that area. Let's assume you have a buy formation around that area. The buy formation you have in the area, the buy formation you have in the area, your zone is here on the formation. Let's say your proximal distal line is here on the zone. Now, do you think this is going to work? Do you think this situation is going to work? Are you expecting market price to come into this area and rally up? Is that what you are expecting? What is the probability? What is the probability that market price is going to come back into this area and break out the previous supply zones we have? What do you think what probability do you think we have for price to break out the downtrend that we previously have on this higher time frame? The probability is very, very low. It is very, very low. Okay, the probability is very low. So for me, I won't be taking any buy trade around that supply level. So you can see this my buy trade. This buy trade right now, this buy trade right now is opposing to this supply level. It is opposing to what we have on the supply. Assuming what you have is a sell trade around that area, assuming what you have is a sell trade around that area, then that sell trade is going to be good because the sell trade is going along with what we have as the trend. The sell trade is going along with the trend, right? Because we are expecting price to drop down here. Why are we expecting market price to drop down here? We are expecting market price to drop down here because look at the previous market structures. Market has been rejecting this level in the past. Benny Paz, mute your mic, mute your mic. So market has been rejecting this level in the past, as you guys can see. You see, market has been rejecting this area in the past. So you see how market has been rejecting these levels here in the past. Market has been rejecting this level here in the past. So what probability do we have that if market price come here, market is going to buy? What probability do we have? The probability for price buying in that area is very, very low. It's very low. But we have a higher probability that if market price come back into that area, market price is going to sell off. High probability, 80% chance that market is going to sell off in the area. Very high. The probability is very high. So you guys need to be following high probability situation. So you can see right now, if I'm selling around this level, if I'm selling here, I am selling along with the higher time frame zone. I'm selling along with the higher time frame zone. But if I am buying within this area, if we have a buy formation here, drop base rally here. Now this drop base rally, you see, this is my proximal line, this is my distal line here. You see, I'm going to be buying against the what? I'm going to be buying against the higher time frame supply. I'm going to be buying against the higher time frame supply. Market is going to eventually hit my stop loss. You understand? So it doesn't make sense if you are trying to take trades when if your zone is sitting close to a higher time frame supply level or close to a higher time frame demand level in either a buy trade or a sell trade. So this is what opposing zone is all about. This is what opposing zone is. Okay. Let me show another example. All right, here's another example. So let us assume that this area has not happened yet. Whenever you see this on your chart, always remove it. from your chart. This thing here, always remove it from your chart. To remove it, right click on your chart, then click on volumes. That is gone. All right, now you guys can see that we have drop base rally here. You see that there's a drop base rally formation here. Drop base rally is a buy trade formation. Now on this drop base rally, if you mark your distal line, proximal line here, this is what we have. This is what we have. Now, if you are trying to buy in this level, you can see that previously we are in a what? Higher time frame supply level. This level is a higher time frame supply. As you can see, this is a higher time frame supply. Market has been doing this in the area. Market has been rejecting the area like this. So there's a higher chance that market is going to do something like this in the area. You understand? So don't be trading whenever your zone is close to a higher time frame opposing level. You understand? For example, this buy trade now, I'm expecting market price to come back into the zone like this. I'm expecting market, this is where current market price is. I'm expecting market price to come back into the zone and rally up. But that is not what is going to happen if you are in an opposing zone. Because I can see that previously market has been respecting this supply area. That is the behavior. That is the market behavior previously. So what do you think? Why do you think market is going to change suddenly? So the market is not going to change its behavior suddenly just because you have a formation there. So market is going to do something like this in the area, hit your stop loss, and then continue with what it is doing before. Because before, market has been doing something like this. So market is just going to continue what it has been doing. So the only time I can take any trade around that area is if I have a sell trade around that area. So having a sell trade around that level is the only time I can take a trade around that area. But if I have a buy trade around that area, I'm not going to be taking any trade around there. Okay. So that is what opposing zone is all about. You can see right now, if you have a sell trade formation around here, it is not good right now. You understand? The reason why it is not good is because you don't want your zone to be sitting on a higher time frame demand. You can see this area is a demand. Why did I say this is a demand? Market has been doing this structure previously. So what we are expecting right now is a massive push going up again. So you can see selling around this area is not advisable. You understand? Selling around here is not good. Okay. So that is what opposing zone is all about. Not to be selling in a major demand level. Not to be selling in a major demand level. The only time I can be selling is if assume the market price is currently around here. That is when I can be selling, because selling around here is going to be making sense. It is going to be making sense in the sense that market is in a supply level on the higher time frame. Look at it. Market is going to do something like this. So market is going to come here and do something like this again. So having a sell trade anywhere around this area is good. Anywhere around this area, having a sell trade around there is good. Okay. So that is what opposing zone is all about. Opposing zone is all about having a zone on a lower time frame. Whenever you switch to a higher time frame, that your zone should be sitting on a higher time frame psychological demand level or a supply level, not the opposite of the trade. For example, you have a buy trade on a lower time frame, and then you switch to a higher, when you switch to a higher time frame, that zone you have on a higher time frame is an opposite of what you are trading. For example, now let's say this is a demand zone. Now let me switch to a higher time frame to see where this zone is sitting on. Right now, I'm not talking about the opening of the candle or something. I'm talking about the psychological level on the higher time frame. Okay, let me mark the zone again. So let's say let's say, for example, I have a buy trade formation here. Now let me see where the zone is sitting on a higher time frame. Okay, on a higher time frame, this zone is sitting on the demand side of the level. This zone is sitting on the demand side. If the zone is sitting on the demand side like this, it is good. Okay, it is good. But if the zone is sitting on the D1 body of the candle, it is not good. Remember, it is not good. Remember, psychological demand level is different from opening of the candle demand. We have two types of demand. We have the psychological demand level. We have the opening of the candle demand or supply level. So psychological demand level is if a trade, for example, does it make sense in a downtrend? For example, market has been showing us something like this in the past. Market has been showing us something like this in the past. And then suddenly, just because you have a buy formation around here, you expect market price to come and respect this buy formation that you have. Market is not going to respect that buy formation, that V-shaped buy formation, because whenever market is dropping back down, market is going to hit your stop loss. You understand? So that is what I'm trying to say. Psychological supply level. So if you guys have any question on this, you can ask now. You can ask. Hello guys, any question?
Yes, sir. I noticed, to show the example, you have been drawing a trend line. Well, not a trend line, but a representation of a trend line. So I'm wondering to know if you could use a trend line to see the psychological level.
No, I don't use trend line. I don't use trend line. I don't.
No, asking if you, okay.
Okay, I don't use trend line. My trend line is like this. I don't usually draw my trend line like this. You know, retail traders usually draw their trend line like this. They are expecting markets, they are drawing their trend line in the sense that this area, this area, this area. You understand? This is not the way I draw my trend. I look at trend. I look at the trend. This is not how I look at it. I usually look at the trend in a way like this. You understand? This is how I look at the trend. So I can see, by doing this, I can see that the trend has changed to an uptrend. A downtrend has changed to an uptrend. It has changed to an uptrend from here because this downtrend has been broken here if you look at it. Previously, market has been respecting this area. Market has been respecting this supply area previously. Then suddenly market gave us a rally-based rally here. You see, can you see that's the rally-based rally, guys? So market came back to that rally-based rally again. You see, when market came back to that rally-based rally again, market did what? Market went back up. Hello, guys. Can you see that? So,
Yes, sir.
but what if can you see this opportunity? Can you trade this opportunity if you are doing it, if you are marking your trend line like this? You won't be able to see such opportunity. So stop marking your trend line like retail traders. So any other question? Any other question? No question?
Yeah, I have a question, sir.
Yeah, you can ask.
Yeah,
If
in
now
a downtrend,
you have a question, after the Zoom has ended, then you say you have a question. I'm not going to answer you. Okay. Because some of you, after I
yeah,
ask, do you have a question? Do you have a question? You say no. Then when we are done with the class, you are then asking me question privately through text. Text message cannot explain some things. So if you have any question, you can just ask now. Yes, Mr. Additional.
yeah, in a downtrend, and you see a buy formation, and the formation is on a demand level, it's sitting on a demand level. That dimension is on the demand, and is this thing is on downtrend. Is it advised to take that trade?
In a downtrend, what is the alignment?
Yeah.
What is the alignment first? What is the alignment?
Let's say the alignment can be maybe buy, or I'm just maybe roughly doing some analysis. Maybe the alignment is sell or buy, but it's a downtrend, and the formation is sitting on the demand level, and it's buy formation.
Then you have to ignore it. You have to ignore it. You understand? You have to ignore it. You have to trade trades. You have to be taking trades that are respecting all these things. You understand?
The alignment, the trend.
Everything. Yes, yes, yes. You have to be taking trades that the only time you can take a sell trade in an uptrend, the only time you can take a sell trade in an uptrend is if we have this type of situation. Uptrend, and then you see this is an uptrend situation, right, guys? Look at it. Uptrend, market has been doing something like this, and then suddenly market broke the trend. So you can see we have the chance to be selling on this uptrend, because it means it is no longer an uptrend anymore. It is now a drop-based drop. So whenever price come back into the zone, you can sell. You can sell in this situation. Do you understand?
Yes, sir.
If, for example, in this situation now, you can see we are in a major downtrend here on this chart. Looking at this chart alone, the downtrend that we are is something like this. This is downtrend, right? Expectation is that if markets come here, we are expecting market price to do what? To drop, right?
Yeah.
And the formation supporting the area also is this formation here, isn't it?
Yes.
But what if that is not what happened? What if this is what happened in the area? Let's say market price came into the area and broke the area like this. Then what can you do in this situation? In this situation, that is the only time you can buy. This is the only time you can buy, because market has broken the trend. Then you need to mark out a buy formation and take a buy formation. Do you understand?
Yes.
But the only time you can take formation, the only time you can take that buy formation is if you can clearly see that the rally in price here has broken the trend in a significant way. You understand? In a significant way. If it breaks it in a significant way, you can take it. You cannot just go and be taking it if the situation is like this. For example, if the situation is like this, market just went up a little bit like this, you cannot just be taking it. You understand? Because it is going to be like this. It means the trend is still something like this. So you cannot just go and be taking a small breakout of the area. You cannot just go and be taking a small breakout in the area and start assuming that this is a rally-based rally. No. Market is going to come back to the zone and just do something like this on your zone. Do you understand? Before you can
Yeah.
take a buy trade, you have to see a significant move. This significant move has shown us that it is not part of the trend at all, isn't it?
Yeah.
So, but this type of move, this type of small move here, it is still showing us that it is still part of the trend. We can still count it as part of the trend. We can still count it as part of the trend. Do you understand? But if we
Yeah.
have a move like this, if we have a move like this, can we count this move now as part of the trend now? It is no longer part of the trend. It is no longer part of it, isn't it?
Yeah.
Because this move alone has spoiled the trend here. It has spoiled it. So if the trend has spoiled, this move has spoiled it. It means we should be taking the opposite trade of that trend and so on. So that is how to look at it. That is how to look at it.
But in some cases, on a lower time frame, it may be a downtrend. On a higher time frame, it may be maybe uptrend.
So you have to be following align. That is why you need to be following alignment whenever you are trading. You cannot have alignment on a higher time frame and be having you cannot be having a sell alignment on a higher time frame and go to a lower time frame and be having a sell a buy alignment. Whatever alignment you have on a higher time frame is still what you are going to be having on a lower time frame, isn't it?
Yeah.
So alignment is good. So alignment is going to direct you whether to buy or whether to sell and so on. So what you guys don't know is alignment is also trend. Whenever alignment changes, it means trend has changed, if you don't know. You understand? Whenever you see alignment change, it means trend has changed. So alignment is also what is giving us the trend that we are having and so on. So anyways, any other question? Any other question? Madam Uzioma, do you
Sir,
have any question?
sir, one question, sir. It's a bit off topic, but sir, I was wondering, you think this Sierra chart will be able to help us to find these zones more easier? And also, I haven't seen you post anything about this Sierra chart in a while. Is it still valuable?
All right, so this class is not Sierra Chat class. If you have any question regarding Sierra Chat, you can ask me on Sierra Chat group, okay? Now let's move on. Any other question, guys? Moleti, any question?
Yes, I've got a question. Hi, good evening, everyone. I wanted to ask, so if I do analysis today, so those trades, do I take them as daily or do I take them as weekly?
Okay, now we have what we call the daily trades. Now,
Yes.
the daily trades, if you want to be taking the daily trade, which I don't recommend for now, since you don't understand monthly and weekly yet. But if you understand monthly and weekly, for example, we have the blue line above. Remember,
Yes.
we usually have the green line below.
Yes, sir.
And then there's a red line too. The red line is the daily, isn't it?
Yes, sir.
So on the daily, to be taking daily trades, you have to see that the green line is above and the daily is below. Okay, before you can take the trade daily. You understand? Before you can take the trade daily and so on.
Okay. But we follow the same method of the.
Yeah, you follow the same method, but this one is not
Okay.
going to be every week anymore. It's going to be every day, okay?
Okay.
So, but on daily, remember on daily, you don't take trades on Thursdays and Fridays on daily, okay? Towards the ending of the week, you don't take trades toward the ending of the week on daily. You only take trades
Yes.
Mondays, Tuesdays, Wednesdays.
Wednesday.
Yeah.
Okay. Thank you, sir.
Yeah. All right. So, now this is the trade on GBP AUD. for this week? Because I can see someone made mistake. Acosta, this is your mistake that you made. You took a trade here. You took a zone here. The alignment, the analysis